Wellington values have been falling. They continue to fall throughout May. Message to sellers, definitely the market is harder work to compete with other sellers and to compete for buyers' attention. You are having to fight pretty hard for their attention, and the best way to do that, of course, is make sure your property is presented well, is free of any major issues, and is priced very sensibly. Buyers' message to you is these are fantastic buying conditions. Don't waste the opportunity, make the most of it. So let's get into it. Median sale price, interesting shaped curve there. So you can see a big drop off throughout 2022. Started leveling off around July 2022. If you look at the blue line, not the red line, the blue lines there, we started leveling off around here. So that's middle of 2022. Essentially level since then. Recovery, a little bit of recovery in mid 2023. And in the last couple of months, we've seen flat there. Trend overall there is gently rising, but it has been flat the last couple of months. I don't pay too much attention to this because it reflects the mix of properties being sold as much as it reflects the underlying values, or at least the mix of properties sold does influence it. The best guide is the Real Estate Institute House Price Index. So let's look at that now. And there's the league tables. Wellington region there has the auspicious privilege of leading these league tables in terms of the biggest drop since the peak of all the regions in the country. We were down to 26% below peak. That's as far as we got down to. And that would have been, gosh, when was that? That would have been well over a year ago now, I think. And then we recovered to about 20% below peak. And we've dropped again in the last sort of, throughout this year, really, to just below 23%. Auckland, as you can see there, very similar, 22% down since peak. The country overall, 16% down. So, yeah, Wellington still has fallen furthest, but Auckland is not far behind. So Auckland and Wellington pretty much neck and neck at this point in the race, if you like. Oopsie daisy. Yeah, so over the last year, you can see there that Wellington region has actually recovered quite well compared to most other places. There are some other places that have recovered well in the deep south, Otago and Southland. Pretty much everywhere else is a slower recovery than we've seen. And so we're about twice the recovery over the last 12 months, as is typical in New Zealand, and significantly more than what we saw in Auckland. So yeah, Auckland market's certainly been struggling as well over the last 12 months or so, or a much gentler recovery, of course. Over the last 3 months, Wellington market has been very typical compared to the rest of the country. As you can see there, 2.8% versus 2.9% for the country, 4.2%. Tailing off, lagging in Auckland in particular. So that, yeah, that market is also struggling. But there we go, the league tables. Now, looking more specifically here in the Wellington territorial authorities. Now, folks, remember, Wellington region in this data includes 8 territorial authorities. We've got 4 listed there: Porirua, Upper Hutt, Lower Hutt, and Wellington City. There are 4 others including in that data, which is now circled in that red ring there. And those 4 are Kapiti, Masterton, Carterton, I think it is, and Southern Wairarapa. So that is why you see Wellington region in the last year, for example, at 4.3%, and Porirua, Upper Hutt, Lower Hutt, Wellington City all over 4.3%. How can you get all of them over and then on average it's below 4.3%? So what that tells you is that the other 4 territorial authorities have recovered in the last year way less than these 4 have. But nonetheless, there's Wellington, the data for Wellington region, and there's the graph there. So you can see the 3-month line there, the orange line. We were recovering quite nicely throughout sort of mid to late 2023, and then throughout this year, basically in the last 3 or 4 months in particular, we have seen results tailing off, and so prices coming back again over the last few months. Over the last year, you can see there, that's what we just talked about, 4.3% for Wellington overall, but 4.6 to 6% for the territorial authorities that probably most of us on this call are interested in. Porou are the two Hutt cities and Wellington City itself. So fairly consistent recovery in those four main territorial authorities over the last 12 months, but over the last 3 months, varying degrees of price retraction or value retraction, and Wellington City is leading the charge. We're seeing the biggest pullback in values there. And this next graph, you can see that's Wellington City itself as opposed to Wellington Region. So we tend to have deeper troughs, steeper hills, if you like, and more variability in between, because of course it's a smaller data set, although still a decent sized data set, but you're going to get more variability with a smaller data set. So more of a sawtooth pattern, deeper troughs and higher peaks as well. And so and recently we have been pulling back, like approaching 5% over the last 3 months, compared to here, as you can, here, as you can see, it's not quite that steep for Wellington Region, whereas Wellington City is a bit deeper indeed. So let's move on. Number of new listings. So this is supply coming to the market. So interesting trend here. We saw increases as we came out of COVID into late 2000, as we went past 2000, sort of late 2021, when it was clear we were perhaps at the peak of the market, things were starting to slow down. Then all of a sudden vendors put their property on at a great rate of knots. So we had this big peak. Then they realized the market was crap as buyers pulled back. And so the vendors went on strike because they didn't have to sell their property. Very few people were under financial pressure from job losses and that sort of thing. Yes, they were facing increasing mortgage rates, but a lot of people don't have mortgages. And so vendors went on strike. And then the good results throughout 2023, which largely were a result, or at least partly as a result, of supply contracting, combined with talk that perhaps interest rates were nearing their peak in 2023, buyers coming back into the market with confidence. And so that gives the vendors, again, confidence to come back into the market. And so then we see this huge surge here over the last sort of 10 months or so. It's really been since the election. So I guess that's nine months or so, with these big increases in supply levels coming on. So as you can see here, the data shows it. 931 new listings in May versus 458 in May last year. So that is double what we saw in the same month last year, and 38% more than what we saw in May 2022. And here's perhaps another example of how extreme this result in May is, because, folks, this is really the main story, is the amount of supply coming to the market is extreme at the moment. So that number there for May at 931 is more listings than we saw even in February. And February and November are typically the biggest listing months in the year. Makes sense. People come back from holiday, it's summertime, they've got plans to put their property on the market. By February, they've hit the market. So February is a huge listing month. Well, in May, so far in 2024, May is the biggest listing month in the year, which is just mental. And this is the pattern we normally see. You can see here, February, March is down, April is down, and normally May is down again. But this year, May is way up here. So it's crazy, 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 the amount of listings coming on in May, double what we saw a year ago. So there has been, relatively speaking, large amounts of property coming to the market in Wellington, and that in and of itself makes the market very challenging for those people who are trying to sell, because there's so many of them. And it's happened at the same time as the buyers have increased their degree of concern over job security and income growth and so on. And so the buyers pull back at the same time as sellers are bringing a whole lot of property on the market. So it means you have to be very, very savvy to compete for these buyers' attention. So huge listing increased volumes for May. There you can see the average for May at 674. So we are well above average listing volumes that we typically see over the last 10 years for May. So lots of properties coming to the market, in summary. Now, there is another graphical form. So you can see there, if the blue line is above the x-axis, that means there are more listings in that month than we saw the same month a year ago. Below the x-axis means less than a year ago. Typically, it bounces around up and down a bit, up and down a bit. You can see the trends there. It goes above the line for a bit, then below the line. But never in the last 10 years or so have we seen results this extreme, where you've actually seen twice the amount of listings coming to the market in a month versus 12 months prior. So it really is pretty bizarre times. What about the other side of the equation? This is number of properties being sold. Again, the red line shows the trend there, and the bar graph shows the individual month results. So again, pretty interesting trend. Look at the red line there. We got down to really low levels of sale throughout 2022 and into early 2023, the lowest we'd seen ever by quite some margin. Since then, we have generally been recovering. But it's not been a really steep recovery, as you can see there. Unlike the new listings coming to the market, where we've seen a really steep increase, we've only seen a gradual, gentle increase in the number of sales taking place. Now, obviously, if you get more listings coming to the market, there's more available to sell. And if it doesn't increase with the level of listings, then that would indicate that the buyers aren't as keen to buy, or then the degree to their keenness to buy is not increasing at the same level as the degree of keenness of the sellers to sell. So there's the data, 663 versus 661 a year ago, basically the same. So whereas we've had twice the listing volumes in May compared to last May, we had the same number of sales in May compared to last May. So that, again, that indicates a market that's becoming much tougher to sell in. 27% more sales than 2 years ago. So again, look at that overall trend. You can see we are making more sales. It's a gradual increasing in sales. Good news for real estate agents. We're making more sales, more money for valuers, more money for these people who work in the industry. But for a seller who is only selling one property, they don't care about the number of sales overall. They just care about that one property, and it is becoming harder to compete for the attention of the buyers because there are so many other listings in the market. And there's the average for May in terms of number of sales. So we are now approaching what would be a normal level of sale volumes in the month after being well below what's normal. But we're still not quite up to normal in the month of May, whereas the number of properties coming to the market well above what's normal. So again, that's just another reflection of the imbalance that we're seeing in the market or appearing in the market. And there's the data in another form. You actually can't see the result for May because it's basically zero. It's on the x-axis. So we have been selling considerably more properties in the month compared to the same month 12 months prior, but in May, not the case. So back to parity, if you like, for the month of May. How long has it taken to sell? 39 days in May versus 54 and 55 1 and 2 years ago. So whilst the market's been getting a whole lot tougher, it actually hasn't, for the ones who have been selling, it hasn't been taking that much longer. I mean, it's longer than we saw back in late 2023, mid-2023, while the market was firming, but it's nowhere near the level, the lengths, the durations that we were seeing sort of even throughout 2022, just after the market peaked, and then it got worse, and then it got better again, and now it's gotten worse again. And compared to what's normal for May, 38 days, 39 days, so that you could call it typical. But certainly, yeah, it is feeling tough out there compared to, say, 6 months ago. But on this metric, on this basis, really not too different from what's normal long term anyway. Inventory, and this is a similar story to duration to sell. For 14 weeks worth of supply versus 14 weeks a year ago and 20 weeks 2 years ago. So same as a year ago and considerably better than 2 years ago from a vendor's perspective at least. And the long-term average for Wellington is 15 weeks. So on this basis, gosh, since about April or so 2023, we have been below 15 weeks. And so technically speaking, you would classify that as a seller's market. Now, I can promise you over the last 6 months, it has not felt like a seller's market. It has felt like a buyer's market. And so I sort of was asking myself the question, why how can it feel like such a tough market? How can each listing be such hard work and not as much buyer activity and that sort of thing, and more listings not selling on deadline day and more listings getting withdrawn off the market and that sort of thing. But at the same time, we're seeing 14 weeks worth of supply or 13 weeks worth of supply when the long-term average is 15. And of course, our memories are quite short. And so I actually looked at, well, what's been the average inventory over the last 10 years? Whoops. And the answer is 9.8. So 14 weeks is less than 15, which is the really long-term average. But over the last 9 years there, since 2015, it's 10 weeks. And so 14 weeks worth of supply is much more than 10, of course. And so compared to what is in recent memory, it feels a lot tougher. What else we got? Number of TradeMe listings. Again, you can see the trend there. We were coming down to quite low levels again, or certainly lower than these heady peaks that we were seeing. And since sort of shortly before the election, we've seen big increases. Partly that's summertime, but also partly it's the majority of it, I think, is just that the vendors saw quite good conditions again in 2023. And once the election was over, they just decided it's time to put my property on the market. I can't hold back my plans any longer, because people are still getting married, having children, moving house, moving city for jobs, getting divorced, dying. All these life things are still happening. And so the need to sell and buy and transact and move and all the rest of it is still there. People can postpone their plans for a period of time, but ultimately not forever. And so we've just seen this massive wave of new listings coming to the market, like we've already talked about on this call. And there you can see the impact on the TradeMe listings. Interesting, you see here that from May to June, we've seen a drop-off in listing volumes, whereas we've seen more listings coming on and fewer sales taking place. So how can we get stock levels reducing when we've got more listings and fewer sales? Well, partly at least, a big part of that explanation will simply be that properties are being taken off the market when they haven't sold. And so that will just be vendors giving up and deciding to rent. And correspondingly, if you look at the rental data, the inventory of rental data across the whole country has absolutely spiked, and Wellington is no exception to that rule. So anyway, there we go. We're 26% more stock on TradeMe in Wellington region than we had a year ago, and about the same as what we had 2 years ago. And the trend there is overall up, but down recently, as is typical for this time of the year. Although, yeah, as we've talked about, the balance between new listings and sales is not typical at all. And there it is, another format. That's quite a smooth trend there. You can see the degree to which we have more listings on TradeMe this month compared to 12 months ago is getting greater. We were less for a period of time, and now that lead is extending out again. So, folks, in summary, values have definitely been softening again recently. New listings have increased massively compared to a year ago, and even significantly higher than what's typical for the month. Sales volumes have been increasing gently, almost back to long-term norms now. Duration to sell is up compared to what we've seen sort of 6 months ago. And we are just above May norms. Inventory levels are pretty normal for the long-term average, but quite high relative to what we've seen in the last 10 years. TradeMe listings are up versus 12 months ago, but trending down now, as is often the case as we head into winter. And sellers, as I say, market is now pretty tough again due to lots more stock. And buyers, yeah, it's pretty good conditions out there. So make the most of these market conditions while they're around, because no doubt they won't last forever. Well, hey, thanks for checking in, and I hope you have a good month. And I know there's been a few of you who've just joined the call. If anyone does want a copy of these slides or whatever, I'm happy to send out a PDF version of this stuff. So yeah, thanks for joining us, and have a good night. If you want individual advice, of course, just reach out to me. Happy to chat. Thanks, everyone. See you next time.